Hey everyone, Bob Kendall here. Just want to thank you all for watching my videos. If you do want to support the channel, go to www.kendallreport.com/wavetech. Sign up for our software. You get market grid on 165 individual stocks and indices. You also will get 16,500 buy and sell signals on our entire database. I thank you so much for supporting the channel. Those of you who have already signed up, thank you so much. Welcome everyone to the Kendall Report, where I share my 41 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Before getting into tonight's video, I just want to remind everyone that there is a live stream at 1:30 New York time tomorrow. I'm going to be going through a lot of details on virtually every market we're going to need to be watching as 2021 unfolds. There will be a replay, and we will have all the different markets that I covered marked on the timeline as well. As we look back on yesterday, we saw the big decline on Monday. Yesterday we saw a rebound. We did see an inside trading range. I'll talk about that in the technicals here in a few minutes, what that means. But overnight we're seeing lots of selling coming in the market on very heavy volume in the futures. This has mostly to do with the Georgia elections. It looks like there's going to be a split Senate the last time I looked. Overall, the markets do fairly well in a split Senate, about 11 plus on the year. And they do a little better with the Republican Senate, around 17%, and on a Democrat about 8.5 or so. Generally speaking, the markets are positive, but we are living in much different times, to say the least. We're looking at the economy incredibly disruptive, but markets being optimistic about their comeback. As we look at yesterday's action, we saw the full-on recovery trade going on. We saw crude oil trade back above 50 bucks. I think it's probably heading towards 60 overall, but we're also seeing a lot of the sectors that are coming into play as well that are going to be part of the recovery. We had the small caps and the mid caps outplaying the large caps also again yesterday. S&P was up 0.7, NASDAQ up 1%, and the Russell up 1.7. And that leadership change and that restructuring of the markets, at least from the standpoint where the cash flow is going, continues to unfold. It's been stalling over the last several weeks, but I'll cover this as well in the live stream tomorrow. But as we look forward to today, we've got ADP coming out. Expect to see 110,000 new jobs, and this is building up to the ultimate number on Friday. I'll discuss more on Thursday night's video about what the expectations are for that, but it does look like, generally speaking, that's going to be a positive expectation. This overnight action is going to affect everything from the standpoint of how sentiment is going to come in. We've seen these type of reactions before to elections, only to see them recover. So we'll see how this thing sets up, but at the moment it looks like we're going to come in quite a bit weaker. The NASDAQ was down over 1% last time I looked before I started the video. But for sure, we're going to see plenty of more volatility. I mentioned this in the last couple of videos, that when we saw the decline on Monday, that set the volatility into a higher level. And this is going to continue to dominate this back and forth market as we continue to have some substantial support not far under where we're trading. Let's go ahead and take a look at the charts and see how Wednesday is setting up. As I begin the review of the WaveTech database, we'll go into the Portfolio Expert platform and use the internal web browser to see the database. And one of the things that you're going to notice here is that we did not see substantial selling or buying coming in. There was a slight bullish ratio on the daily 1.2 model. On a daily 3-2, it was negative, so it was basically just a rotation. We saw the percent bullish stay above that 62% level that I discussed in yesterday's video, and this is going to continue to be on watch here. Now, if we come in weaker as we're looking like the futures are set up and we close lower tomorrow, we could see this actually penetrate through the 62% level. I mentioned also in yesterday's video that the next couple of days will be critical, and it looks like we're set at least for a potential test of this. If that number gets broken, then we will see further liquidation toward a 52 to about a 45% bullish percent level, which will indicate further declines in the markets. At the moment, we're still positive. If we do get this penetration of 62% bullish, I'll discuss at time and the implications of what that means for the markets. As I review the S&P 500, the futures are currently down 24 handles. We've seen a substantial amount of volume right now. There are 173,000. This is about double of what it was last night. So we're seeing a lot of selling overnight. We're seeing a reversal of the action that we saw yesterday. Now, I mentioned in the opening comments that we had an inside bar, and after an outside bar, if we close lower, that automatically signals lower prices. But sometimes the configuration it sets up is that the next session will trade within the range of the reversal bar. Then that suggests that the low of the reversal is likely to be retested, even though we managed to close higher yesterday. That number right now is at the 36.52 level. And as I mentioned, the 40-period moving average is going to come into play as well. As we look at the market grid for today, the S2 number is 36.82. We've had a low of 36.86 overnight, so we're basically testing the S2 level. R1 is 37.35. The high so far has been 37.34. So we so far on the futures have an R1 almost S2 number. My expectation is if we can get through that 82 number, we will see a further decline down to at least the S3 number. The real numbers to watch on this market will be on a weekly, and I'll cover that on the cash markets. But if you notice, the PPMs are all starting to fade. The upward momentum is dissipating very quickly, setting the tone for a downward move toward this 40-period moving average, which is currently 36.47. It is rising slightly in the pattern. Let's go to the cash market. As we look at the SPX, you'll see on a daily, that number or the retest of the support will be at 36.62 on cash. If we take out that level, as we look at the market grid for today, S3 is 36.80, STX is 36.65. So that suggests we're going to have to trade down to the STX number. The configuration between the futures and the cash are slightly different. They usually are, just because of the difference in the trading sessions. But we're going to see the PPMs turn lower on the cash tomorrow on the daily, and this is going to also suggest that we're going to move toward that 40-period moving average at 36.51. If we look at the weekly chart on the cash, what we're going to see there is that the 10-week moving average is 36.54. So everything is pointing toward going to that number at the 36.50, 36.52 level. Now we have PPM1 at a plus 1.27, suggests there's only a 30% probability to penetrate 36.54. This is what I was referencing when I was talking about the support levels just below the market. So the 10-week moving average is likely to hold. There's a very small probability that we're going to see that level penetrated. The next market that I'll cover is the NASDAQ. NASDAQ is down 212 points, down 1.64%. You're seeing that the PPMs on the daily are fading quickly, and in fact, PPM1 has turned negative overnight, and there's very little upside momentum. It also appears that we should go toward the 12,379 level, which is that 40-day moving average, and it is currently flat. Where the key numbers are going to come in on this market is when we look at the weekly chart, which is going to show that the 10-week moving average has an upward momentum of 1.26, which suggests there's only a 30% probability that we'll get below that level, which is very similar number, 12,395. Last night this number was around 12,400, so it's slightly lower because of the lower calculation. The other thing to look at here is that we have printed down on a weekly basis down to the STX number. 12,556 is the STX, or the extreme for the week. The low's been 12,522. So we have traded below that number, and most likely we're going to see a continuation of that and probably bounce off of this 12,395, or the 10-week moving average. Now, the overall configuration of these PPMs are relatively positive because we have PPM 1 at a point plus 0.126, PPM 2 at 0.59, and PPM 3 at 1.18. So we're nowhere near a major rollover. We could see some more downside, but we should see some support. It will take a couple more weeks of sideways trading with a slight downward bias to actually roll this market over. It does look like the support will hold. The final market that I'll cover tonight is gold. Gold continued to surge yesterday. We are seeing some moderate downside tonight. We did get the STX sell on Monday. We were able to close slightly higher, but now we are locked into the market grid here, which suggests that the high-low range is now 1920 to 1972. My expectation is that we'll see it move back toward the S2, S3 level, which would be 1933, 1926, with the extreme of the 1920. So we should see further backfilling. We're seeing some strength in the Dow overnight and some other things that are happening out there that is keeping some moderate pressure. Overall, this is still a very positive market. The weekly chart is where all the action is, and we did see the weekly trade above the RTX number. That was 1950.80. The high was 1959 even. We backed back below that level, but we're trading right at that RXT number. So if we close on a weekly basis above the RXT level, that would be significant in that it would set more of a sideways tone. And as you know, as I've been talking about on gold going back for the last 3 weeks, that I thought we could trade up as high as the 0.618 number, which would be 1968. But we're trading right in that resistance zone that we're likely to see between 1950 and the 1968 level. Market should stall here, set up a further pattern before moving sharply higher, which I believe we will do later in this cycle. This is the end of this video. Don't forget to participate in the live stream tomorrow at 1:30 New York time.